If you listen to the financial media, they will tell you the future of AI energy is nuclear. They point to Microsoft restarting 3 Mile Island, episode 001. They point to Amazon buying nuclear startups. It's a great story. It's clean. It's futuristic. It is also a decade away. A traditional nuclear plant takes 10 to 15 years to permit and build. But what about small modular reactors, SMRs? The nuclear battery we keep hearing about? The promise is 3-year deployment. The reality is that they are still largely prototypes stuck in regulatory purgatory. The first commercial deployments aren't expected until the early 2030s. But the AI arms race is happening now. NVIDIA is shipping millions of chips today. Those chips need gigawatts of power tomorrow. So what is the only fuel source that can be deployed in 18 months, provides 24/7 baseload power, and is currently trading at rock-bottom prices? It isn't uranium. It is the most hated, unsexy commodity on Earth, natural gas. While everyone is looking at the nuclear horizon, the smart money is buying the gas pipeline right under their feet. To understand the trade, you have to understand the physics of a data center. An AI training cluster runs at 100% capacity, 24 hours a day, 365 days a year. It cannot tolerate a single second of downtime. Solar power works when the sun shines. Wind works when the wind blows. To run a data center on renewables, you need massive batteries, but batteries are expensive and degrade. The tech giants did the math. They realized that net zero is a marketing slogan, but uptime is a business requirement. They cannot risk their $100 billion AI investment on a cloudy day. So they are quietly pivoting. They are asking utilities to keep the coal plants open. But more importantly, they are funding a massive build-out of natural gas peaker plants. Gas is the on-demand fuel. It turns on when you need it. It is the only bridge that spans the gap between the grid of today and the nuclear future of tomorrow. Why do we call this the next uranium? Because the setup is identical to the uranium market in 2018. In 2018, everyone hated uranium. Fukushima had happened. Germany was closing plants. The price crashed. No one wanted to touch it. But the fundamental need for baseload power hadn't gone away. Eventually, the supply destruction met the demand reality, and uranium stocks went 10x. Look at natural gas today. The price has been crushed. Warm winters and overproduction in the U.S. have pushed prices to multi-year lows. Drilling rigs are shutting down. Producers are cutting budgets. Capital is fleeing the sector because of ESG mandates. This is the bottom of the cycle. We have supply destruction, low prices, meeting demand shock, AI data centers. This is the exact recipe for a violent bull market. The most bullish signal is the hypocrisy. Publicly, Microsoft, Google, and Amazon talk about their carbon-neutral goals. Privately, they are the largest buyers of fossil fuel infrastructure in history. In Virginia, Data Center Alley, utilities are abandoning their plans to retire gas plants. Why? Because the tech giants told them to. They are signing long-term contracts for gas delivery. They are building microgrids, small gas power plants right next to the server farms, to bypass the public grid entirely. They're doing this in secret because it hurts their ESG score. But money talks. When the richest companies on Earth are panic buying a commodity in secret, you should pay attention. They know they can't code their way out of a blackout. There is a second catalyst that makes this trade explosive: LNG, liquefied natural gas. Historically, U.S. natural gas was trapped in the U.S. It was cheap here but expensive in Europe and Asia. That is changing. A massive wave of new LNG export terminals is coming online in late 2025 and 2026. Plaquemines, Corpus Christi Stage 3, Golden Pass. These massive facilities turn gas into liquid and put it on ships. This connects the cheap U.S. market to the expensive global market. It creates a price arbitrage. As we export more gas to Europe and Asia, the supply remaining in the U.S. shrinks. This forces the domestic price up to match the world price. We are about to drain the U.S. glut and sell it to the world. This transforms U.S. natural gas from a local utility into a global strategic asset. Let's look at the engineering. AI chips like the Blackwell B200 run hot, extremely hot. A rack of AI servers consumes 100 kilowatts of power. A traditional server rack consumed 10 kilowatts. This is a 10x increase in power density. You cannot support that density with wind farms located 500 miles away. The transmission losses are too high. You need dispatchable generation located near the load. Natural gas turbines are the only technology compact and powerful enough to sit next to a data center and provide that density. We're going to see a new asset class, gas-powered compute. Data centers will become gas centers. The convergence of energy and intelligence is the megatrend of the decade. The final reason this is a smart money trade is sentiment. Everyone hates fossil fuels, funds have divested, students protest, governments tax it. This means the sector is capital-starved. No one is spending money to find new gas. When you starve supply, no drilling, and boost demand, AI plus LNG, you get a super spike. Investing feels uncomfortable. It feels dirty. But the best trades always feel uncomfortable. Buying Nvidia at the top feels good. Buying a gas driller at the bottom feels bad. But the profit is in the pain. Let's summarize the investigation. AI needs energy. Nuclear is too slow. Gas is the winner by default. The smart money playbook. 1. Long the producers. Look for U.S. natural gas producers with long reserves like EQT, Antero, or Range Resources. They own the molecules the world needs. 2. Long the infrastructure. The pipelines and LNG terminals, Cheniere, Williams. They charge the toll to move the gas to the AI. 3. Ignore the volatility. Gas is called the widowmaker for a reason. It is volatile. Do not use leverage. Position size for a long-term hold. 4. Watch the strip. The futures curve tells the story. Prices for 2026 and 2027 are already rising. The market knows what is coming. The cloud is made of servers, but the servers are made of gas. This is the smart money wisdoms. The future belongs to the owners. Thanks for watching. Like and subscribe. See you next time.